Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, December 13th, 2023. Well, we started to get our clues today, basically right from the deliverance of that PPI number, where the market totally shrugged off anything that any algorithm would perceive would be slightly negative and just started to run. And it didn't stop. And then the markets picked up even additional steam once the Fed gave the expected news that they were going to hold it at current levels without any changes to interest rates. But it was during that press conference that was filled with lots of dovish type statements that the market just went absolutely bonkers. And so we saw a resumption of pushing in a lot of capital, a lot of, I don't know, of a short covering, whatever the deal was. It was pretty impressive. And it was produced a very, very strong upside day across the board. Now, most of the morning and into the early afternoon, the Russell was actually down. But once that Fed news came out, boy, did it take off, and it did not stop. So to me, it was like there was all that pent up energy just waiting to be put back into the market. And once they did, the Russell ended up closing higher by 68, almost 69 points, which is a very, very large move for the Russell. The Dow, cash market, record high. The S&P, close, but not yet. The NASDAQ, basis to cash, not yet. Basis to future, yes. New all-time high reached today. So how does this all figure in on what we're really going on? I'm basically going to stick to the picture that's really right in front of us at the moment, and that is counting out this minute fifth wave up. So I'm going to continue to do that because it's subdividing. It's actually pretty clean, but reaching levels that are stretching things to the top side of what range should be created. Now, with that new high in the new all-time high in the futures market, it tosses that larger count. And I'm not going to be focusing on the larger count, but I'm just going to be adding that, again, I do believe that it is an irregular B wave. And so with that in mind, it gets pushed and it goes to new all-time highs. Now, I'm not really being pushed in the direction where I need to go to one of my alternate counts on my very long-term picture because I actually don't see it, and I'd have to really go back to count it out in a fashion that would allow for a cycle degree fifth wave up to be in process right now. So again, it's out there, but I'm kind of holding to what I have right now. But my focus is going to be on this short term. I'm working off an hourly chart. I'm counting up a minute fifth wave, and that minute fifth wave is basically here in the NASDAQ subdivided 1, 2, 3 times. So with this continued just push and push and push and push up to upper levels, I'm talking 2.618 on this third wave. And we're there. So in essence, what ended up finishing up today, I believe, is the sub-minuet third wave. And that would be, this is the sub, which actually came in and had to get pushed because the third wave did not finish there. That wasn't the fourth wave. Third wave got pushed to here, and that was on that blast. It's just abundantly clear. And the pullbacks have been minuscule in terms of what one would expect. So that remains out there. As we can see, it's overbought and not really being allowed to pull back. And that may be the case because now we're in year end, and now we're in what's going to be happening on Friday, which is, by the way, again, a triple witching expiration. So it's a large expiration. It's the last monthly expiration. And so I think they probably almost consider it a quarterly because it's the end of the fourth quarter. Either that or it's going to be the one that's right at the end of the month. So a lot going on. We're seeing individually within the NASDAQ, the components. We saw Apple up 325. It just hung out, hung out, hung out. But once it started, boom, 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 up it went. And I think that's in preparation for Friday's expiration, as well as it just pulls in a lot of additional capital as more investors are going to decide that that's the stock they're going to hold going into the new year. We saw some strength in Netflix again, but I have to be honest with you that I have one on my trading screen, which is in through NinjaTrader. I have an indicator that tells me the cumulative delta. While this market is rallying up 100, up 200, up massive amounts today, the delta consistently was negative, which tells me that they're selling the underlying. So I think that what that then it was really showing me is that the options trades, if you're a dealer, you're going to hedge every time somebody comes in to buy that premium. So once again, we saw how the VIX is closer to 12. And so if we're continuing to see on that level where they're selling the VIX, they're selling the volatility index and taking that capital and putting it into the component volatility, i.e. Apple. And what they're buying, if they're buying a call, they're paying a premium. That, remember, in an option, premium equals volatility. So what's the volatility of that option? So whether it's going up or whether it's going down, it's still, people are paying a premium to have an out of the money, basically, option. And what happens then is the dealer, the market maker who might sell that call, turns around and hedges it by buying the stock. So again, it just like fulfills itself. It's, oh, I'm going to buy the call because the stock's going to go up. Well, you buy enough of them, the stock, is going to go up because we have the dealer hedging all the way up. And that kind of was across the board. And we saw then as well, once the Fed decision was made and Powell began his press conference, the bond market, the treasuries exploded to the upside. And in that respect, it wasn't on that they don't feel that rates are going to be hiked anymore. But he made it very clear that they're going to keep them. They're going to keep them at current levels for longer than what many people may expect. And not to get, and they still reserve the right or the option of having to raise them again should inflation kind of reignite. So again, all of that kind of was out there, but yet the bond market, really, the 30-year bond was up over two full points by the end of the day. And so what I believe can be going on there is it's like, well, if the rates aren't necessarily going to be hiked anymore, and we can look forward to maybe at some point next year they start bringing them down, and you're looking at a long end of that curve, you're going to want to buy, the yield. You're going to want to buy and get that yield in the bond. And so, because if anything, that's kind of what you're going to pull in if you're parking money. So again, I think there's a lot of things that were kind of going on based on what the Fed's decision was today and now going into 2024. So there was a lot of position squaring to finish up the year and to move into 2024. Here, I'm going to focus in the NASDAQ. I'm on the 1-hour chart, and this is as far as I want to go because I'm counting up. The last thing I'm going to just really make reference to, it's like, I've heard you guys all along, the ones that are coming in and tell me I've been bullish and you're not. No, that's not true. My long-term picture really is not changing, but my short-term picture clearly has been that we are going higher. And I've been giving the levels. I've been talking about these are the levels. If it breaks, it's going here. If it breaks, it's going there. And so therefore it's like I don't understand how people are still confused about what I'm talking about. My focus right now is on this hourly chart. So that's day to day, hour to hour. This is when it changes. And so I want to make sure that I'm making clear that my focus is continuing to show that we still have additional upside before this move is complete. So let's start. We're in that minute fifth wave up. We are inside the minuet third wave, which is extended twice. And so I feel today what may, and I'm not getting total confirmation other than that it got up to a resistance level and then did start to pull off. And the initial throwback off of that was down over 100 points, about 125 points, immediately off of the high that it made above 16,800. So it got up to 16,806 and then immediately dropped back down to 16,681. Now, that was a pretty nice drop, and then just started to climb again. Now, what I've been looking for all along, and thus far as I've been talking about, they've been very shallow, are the corrections. Very shallow fourth wave, but it was an ABC. So the setup was get ready. They're going to take it higher. So when we're looking at on this chart, it looks like nothing. So, but I need to, start bringing it down before we can see that it was not bad. I mean, 16,656, 16,573. So it's, an $80 drop in a fourth wave, not up to snuff in terms of what I'd be looking for on a Fibonacci basis, but certainly enough to set the stage for the rally to continue, which it did. Very, very strongly, it did. So again, you see, right at 2:00, bam. And it took that hour. And then we got into the final hour where it topped, came down, and then came back. Again, because, buy on close, et cetera, et cetera. So the market, but we still, in my opinion, I think we still need to come down. Now, what I can add from here, if we're just looking for a sub-minuet wave 4 correction, just looking at the fibs, right? So what we're going to do is just kind of put in what the most common are. And that was wrong. Let me do that over again. And my computer gets a little bit weird on all of the anchors because I do have the anchor on. Okay, so what we have, normal fourth wave, 0.382. That's 16,535. That's right there. Happens to be also right below where the 50 hourly, the hourly 50 simple moving average is still rising, but it's resting right now just above there at 15,549. So very logical that it's like, okay, if they're going to pull the market back, that would be a nice logical place for it to do so. The bare bones minimum, as I call it, would be 0.236. And even that, 16,638.39 right in there. And again, that's just below, the hourly 20 period is sitting just below there at 32. So again, those are where I'm believing we should come. Now, if this is going to be the A wave, and what I can possibly do, let's go down and take a look at the 15-minute chart, open that up, and you can see. So now if I had to come through and say, well, what if this is A, right? If we're looking at this as being 3, then let's go through and take a look at what could this C wave look like? Again, if it's A, and it was pretty good little nosedive, right? So C equals A at 16,661. Still, we're above there. But if it were to do it, I would likely accept it as that fourth wave, the sub-minuet fourth wave, looking for that sub-minuet fifth wave up. And we'll show you those levels. Once this 4 comes in, Then let me just finish this up. So here we have that. Here we have the 15-minute 20, and then the 100%, and then we have the 2.236, and then again there's the 50, the 15-minute 50 sitting just above it. So again, these levels on could work, could stop, could halt, could finish. Because ultimately, then what we have coming down on the 15-minute chart is right above the 0.382, 16,535. We've got the 15-minute 200 simple moving average at 546. So things continue to line up when we bring the charts down to even a smaller time frame. But I would be looking for a nice ABC. And this is the A. We got the B. It came up much more than I would expect, but still did not break to the new high. But, it's up there. So if we can just finish this up, get ourselves down, or get the market, get itself down into here, it's going to look good, set the stage for yet another powerful day tomorrow. I do not expect that we're going to see much. Well, I think we'll start to see selling like we did, but I'm not looking like it's just going to have a lot of follow through. Unless something outside of what we're dealing with in the economy, what we're dealing with the Fed, what we're dealing with the Treasury, all of those factors are now in. They've now been told, at least through year end. So if we're going to pick up that year end rally or the movement that we need to see getting ready for Friday expiration, my thought process is that it could be a little choppy. But I think that there's still upside on Apple. I mean, there's a lot of retail, a lot of people that just really want to see Apple on a new all-time high. Well, it's above 198. So we're pushing it up to 200. And I'm sure if I go look at the options, it's really going to indicate, yep, there you got it. There's enough people that are betting on that. So we will see. It's all in the works, let's say. So back here on the hourly chart, I can get this fourth wave in, then I will add one more layer to place where the sub-minuet fifth wave will be. But let's just take a look at what we have standing. So for minuet wave 3, that would be 2.618 at 16,828. We got up to 806 this afternoon. Our next level there is 60,828. For minute 5, our next level is 16,098, which got broken. So closed below, but still it did get above. So what is above all of that? We go up to 3.618. So when you're working on Fibonacci, this is how things kind of progress. So you can see in between, yes, I would be suspecting that we have 850, 875, 16,900, and we'll fill in a lot of those blanks once I can get that fourth wave in. Now, once we get confirmation that wave 4 is done, then I can run additional fibs here out to here, wherever that comes in, and that'll be filling in all of this. So, but right now, what do we have on our larger waves in progress? Well, for the minuet wave 3, after 16,828, if that doesn't hold and we go racing through that, next level up is 17,145. And that's 3.618. Now, for minute wave 5, that level is 17,127. Actually, 17,130, I'm going to call it. Now, that is much higher. And then we still have one level above. So as these get broken, I tend to take them off. Like this one, I should be taking these off because they have been met. So it cleans it up so we can see what remains. So take off those fibs. This is for a pullback. That's what those are representing. What we had before were the additional fibs for the minuet, wave 3, which now what's left is 2.618. So we've gone through 618, we've gone through 100, equality, we've gone through 1.618, and we're now up to here. So, but if it were to stop, and once I get these in, if it stops just above here, then yeah, it's being met. It doesn't necessarily suggest that we're now going to rally up to 17,145. That's the next fib level for that wave, as we had for these coming up, and they were met. That's the thing. They were blown out, basically. The equality all the way up, it got blown out. 2. And then here, this one, minute 5, yes, it would stand a higher chance of getting here because of where we are within all of this. We're yet to finish the minuet wave 3. And we get a minuet 4, and then we still have a 5. So this is not unreasonable at all. Now, one other layer that I'm adding way above there is if we're going to consider that it's an irregular B wave. Where does that come in? Way up here. Most common, because right, it's an irregular primary B wave. So we're going from the all-time high as it stood before. We run that down to the bottom, which would be October of 2022. And from that level, we run it, and we now include beyond 100%, which it exceeded today. We have 1.236 and 1.382. Those are the extensions for an irregular B wave. And those come in at 18,043 and 18,936. And initially, when we were looking at levels much, much lower, they were there, but is my expectation that they're going to get there? Not at the moment. At that moment, they really were not. It's not that I wasn't considering them. It's not that I wasn't looking at them. But it's a big difference between saying, oh, yeah, that's where we're going to go. Then, because there was nothing really to build that case. As this rally has progressed, I have talked about the irregular. I have brought these back on. And as they continue to progress, and I'm using, minuet or a minute wave 5, here we have 2.618, 3.618, 4.236. Those are the multiples that you use. And you can see that we have here minute wave 5 and minuet wave 3 have the same multiples going up. So if the third wave gets to here, this minute 5 is going to the moon. We're gonna end up here. And there are different multiples. You keep going, but we will be working it from a different angle. We'll be working it from what's going on up in here. But for right now, I'm looking for a little bit more of a pullback. Let's just take a peek. 1 hour did. You see RSI starting to turn. Doesn't mean it's going to last, but look at from 54 all the way up. It was like, get out, get out, get out. It's just overbought. Now, I'm going to take this up. Let's look at the 4-hour chart. Strongly overbought. Let's look at the daily chart. Not super strong, but has moved into extreme, very overbought. Let's look at the weekly. One down, getting ready to enter back into it. Let's take a look at the monthly. Still has room. So the monthly has the room that it could, but you can see it could get overbought. And it really got overbought starting way back in here, right? All right, check it out. All right, pandemic got overbought before we were done with wave 1. Stayed overbought all the way up to the top. All the way up to the top. So again, It could get up there, get overbought, and stay overbought till it's way up there. Now, the other thing that I will share with you now, because this is on such a large picture, the monthly is what gives us the idea or the thought of an irregular B wave because of the size of the move. One thing that Elliott did right about it, and a lot of people get very confused on, and I may even going to be stating it as confused, but my thought process is as follows. That Elliott talked about highs being double corrected. And that is what he was referring to in my view as an irregular B wave. And he put that together and he used 1.236, 1.382 as his fibs for continued upside. And not necessarily that the move itself, because he had counted out 1, 2, 3, 4, 5, and he counted out A, B, C, or A, and looking for the B wave. And it was the B wave that just caught fire, pushing the market back above the existing high and reaching 1.236 or 1.308, 382. Now, the double correction. First time they got the high, it corrected. So for our current situation, we went down to October of 2022. And we corrected pretty strongly. I think it was like 5,000 points. But then we started to rally. However, I think also what contributed in a lot of this was that what's changed? Well, everything is quantitative. Everything is algorithmic. Algorithms just run in and do based on, they pick the news, they pick this, and they go, and that's the trade. And then it's just going to move, and we all go along with it. Now, we've had a lot of twists and turns along the way. We've had a lot where it's like, okay, that's not really such an upside move, and maybe it's part of an ABC, if that's what I was looking for. And all of this now fits. Now, granted, we still are having in my mind and still having to deal with that we had that breadth thrust indicator trigger twice, once in March and then in November. Now, could it still be that that's what's in play? And yeah, it could. It's been talking about how the market would be 15 to 25% higher than when it was triggered. Well, what if we really reach these levels at the end of the year, or we reach them at the beginning of 2024? Who knows? We'll measure it out. Is it 15 to 25% higher? Therefore, the indicator, correct. We check off another successful trigger being put into action. Again, so we still got a lot of stuff going on, but the double correction. So we go up in the B wave, we make another additional new high, which we have now. Not that great, but we are above the all-time high and producing new highs now. Get up there, hit it, and we come flying back down through it, doubly corrected. A wave, the C wave, doubly correcting that high. Even off the new high, it's still doubly correcting the old high. So I think that's what Elliott was talking about. And that's why I'm kind of like going like, oh, I think it's an irregular B wave, and we're likely going to get an additional decline that most people are going to be like, why? How's this happening? I thought we were so bullish. It's like we are right now. When that changes, when the mood changes, it's like everybody's going to wonder what's going on. Well, I don't know. We'll see. In any case, right now, going back to this chart, I'm looking for a little bit more of a pullback. Ultimately, or let's just say my wish list would be that we get deep enough that we get that swing and it just does it. There's no question that we get that clean ABC down, even if it's just the minimum. We get a clean ABC down, finish it, and move. Again, fourth wave of one lesser degree is right here. So we're really looking at just above 0.236 to just below 0.236, but not and just above that 382. So it would be ultimately perfect if it could drop down into this previous fourth and then launch again. And that's what I'm looking for because, again, our wave count is incomplete in terms of we have yet to finish the minuet wave 3. Now, that's what we're looking for, the 4, and then get that 5 on the sub level and finish minuet 3. I believe we can get up into here. Minuet wave 4, we'll do it again. So wherever this 4 ends up, that's what we're looking for it to come back down into again, and then run one more time. And now we're up into here, possibly even higher. So can we do this by year end? Yeah, we probably could. Look at the strength that we've seen. I mean, this is December the 4th. Today is December 13th. And we've gone from 15,920, we'll call it, to 16,806. Wow, right? It's a lot. It's a lot. We've gone through the roof. We basically it's 900 points in 10 trading days. Wow, it's a lot. So in any case, we still have more. And moving averages, not a problem. Everything very clean in alignment. There's a 4, there's a 20, there's a 50, there's the 200. So, and again, the thing that got me today was the fact that we were moving higher in that NASDAQ, and the cumulative delta was negative. Over in the S&P, same deal. I'm working a minute wave 5. That's as far as I can take it. Here we have still, let's go out just for a moment. Let's look at that weekly chart and look where this is. It's at 4,808. And today we got up to 4,764. So we're not quite there. And this one's a little bit different. I don't think it's quite done yet. I think this is like 3, 4. Can I, this is on the hourly chart. If I really got to bring it back down to the 15-minute chart and open it up, what do I got? 1, 2, 3, 4. No, not done. So if anything, maybe we're just done with a 3. And we here as well need a little bit of a 4th wave, a little bit more of a 4th wave. And I'm going to consider this the 4, and this is like 1, and this is 2 of 5. Possible. These are all possibilities. But nonetheless, I do think that we still have quite a bit of upside left to do. Now, what I can do is I can put in, let's just talk fibs. What we can kind of talk about here in terms of a pullback. Yep, we can. That just equaled 63, 64, barely, right? A, B, we come back down to C wave. And that would be, see, look at that. Look at how perfect that is. That's 382. That pullback was 0.382. That was a clear set. Go. So if anything, again, I get the 4 and the 5, and this 5 and the 3 would be done here. And this would be minuet wave 4. It starts to get more interesting. It really does. I'm not putting that in just yet. I've left them up here thinking that A, B, C, maybe a flat. Then it's going to make more sense, and I'll be more comfortable doing it because I need NASDAQ and S&P. They got to really go hand in hand. They can't be that much off from one another. So that's why I'm leaving it open, that we still might get up here first, then pull back more. So again, it could be over. We come up, we put it here, the 3, the 5, and the 3 go up here maybe somewhere, and then we pull back yet again, and it looks like we might come into this area. So again, lots and lots of things going on. Back out to that hourly chart so we can fill in the blanks here. So again, these are their fibs coming off, Be nice to get back down right into that 382, make it a nice flat, big wish list. Still needing another high. I think even to complete the minuet wave 3 and the sub wave 3. If anything, maybe it completed here and it's ABC and that 4 will go down. And that's easy enough to make. So if indeed this 5 and that's the 4 are going to go into place, then I can run one more to there, and it's going to fill in where we think this can come in up into here. So here's the deal. Here's how I will leave this. Ah, that didn't work, did it? Let's go back out there, go like this. Okay, so here we are in here. And again, I'm running these in these fibs. If this completed it, first thing I'm going to do, let me just do this so that it's all going to, we'll be able to see it. This is wave 1. If this is going to be wave 4 on a minuet level, wave 4, right? Because it was 382 of, was it of that? I don't think so. But let's just go. Let me just show you the example of what I'm talking about. And I'm going to run this all the way over to here. So what we're looking for, again, if this is minuet wave 4, and we're looking for minuet 5th wave, here it is. 618, not the most common. Most common is equality. That takes us to 4785, we'll call it. 1.618 takes us to 4814. Now we're up into these additional levels. What we have, 2.618 is 4824. 1.618, that is 2.618 of this guy. And this would be 1.618 of that 5th. That's this one, and that one should be taken off. Yeah. Let me get rid of this one. I'm leaving on because I didn't think that this was over yet. I needed that still to be out there. Okay, so I know it can be real confusing when you're trying to get all of your fibs up there to see what's going on, but we have to follow the line. This is for that 5th, the sub minuet, wave 5. If this is not complete, our next level is up here. And we have here 1.618 for minuet. So 2 things. If this is not complete and this takes us up to here, then this comes down because it's going to have to go up here. Okay, so let me do it again because I need you to follow me on this. What I'm running here is the possibility if that low this afternoon was the completion point for minuet wave 4, right? This degree, that is suggesting that this all finished here, right here, and that the 5 is here, the 3 is here. Now, if that is not the case, then this comes off. And then we're back on that. The rally would then suggest this is where we're going to go. And I'll show you that. I'm just going to take that back off again. So that's what we're looking at. We have 1.618 again for the subminuet 5th wave at 4775. So if anything, was this just a 1, 2, 3, 4, and a 5 within the 5th? Yes, it could be. Then from there, we pull back again, likely into this zone. And then we run one more time. Now, if we surpass 1.618, our next one up is 4824. And that would be for this wave 5. What we have is 2.618 on this level is much higher, right? Oh, let me put it in. Let me add it. Come on, pull away. So where is it? 3. Here it is. Okay, 3. See how far these things go. 3.618 is 4786. So here we have it. If this is still not done, and we're looking for minuet wave 3, and this is going to be an extended fifth, then we have here 47.75, and here we have 47.86. If it does complete there, great. Then that is done with it because the structure tells us it is. So that's the cluster zone that could be, if this is going to extend, we'll get up into here. This, and it's really going to have to do a blast. It's going to have to plow right through everything to get us up into here. So is it impossible? No, it isn't impossible. Not anymore. But I've been looking for here if that didn't finish. Again, showing you how I would line up for minuet wave 5. If these did finish here, we don't go up anymore. We turn, come back down into here or here, putting in a nice clean 4. Then the 3 comes down, the 5 comes down, we put a 4, and then we rally. And that is the calculation, right? It's an extension from there to there, out to that, wherever this finishes. So that's what I was showing you. Ultimately, we start getting up here, we're into new high territory on a futures basis. We're into the new high territory. Then we're in what we would call the irregular B. I'm not going to put it on just yet, but I will show you how. Again, we're coming down, and there it already is up there. So, and we're taking it off of the March contract, I believe, coming down to those levels. So where is it? 53 to 55. So they're up there. If I have to take it off of these levels, I'm going to remove that. I'll put it on to what I have. So we won't go anywhere outside, but we'll stick with what we have there, and then change that, put it in. We can take all that off, right? So we have 100%, 51.16, 53.07. If we're really going to be working an irregular. Okay. And you can see there's a lot of space in between them. So I think we stand a fairly decent chance that we will get above to new all-time highs, and that would be both the cash and 48.18 is the cash market. 48.08 is the futures market. So I think, yeah, we could do that. We could get there. So I'm not going to discount that. All right, there's the high, 48.08. That's the 100%. That's why it's theirs. But I think, can we get up to here? Sure can. I just showed you how. Then we're looking at higher levels, and we can add them. I can add 3.618 and 4.236 on both of these levels if necessary. Right now, this is all I'm going to work. Moving averages, still 50. I would think I thought it was going to move a little bit cleaner today on the hourly. And the only thing that really kind of kept up, but you can see, did not really rally all the way with the market. So why? Well, that's why. Relative strength kind of got a little bit overcooked. So that's where we are. And that's where I'm going to complete it. I know this probably went longer, but I'm grateful if you're listening right here to the end, because I need you to get all the insight on what I'm looking at, and that I still believe that there's continued upside. I know I'm going to get a litany of people that tells me how wrong I've been, blah, 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 blah. You save it, because this is what I'm focused on, and this is what I'm helping people trade. All right. Next update will be on Thursday, December the 14th. Just a quick view. We do have numbers tomorrow. We have initial jobless claims, import price index, U.S. retail sales, and business inventories. Most of that comes out at 8:30 a.m. Eastern, 10 a.m. business inventory. So we get a lot of stuff. We get a lot of stuff. And it could just help us get that fourth wave in. And a pullback is healthy, healthy. So we got to let them happen. Otherwise, it's like you run out of bullets to run up, because it's just like it gets really, really thin because people aren't going to sell. Market makers aren't going to sell. All right, next update, Thursday, December the 14th.